So welcome back, guys. We're got a video for you today. It's trading this game. It was South Africa versus India in the Super 8s, and as you can see, South Africa won the game. I got some good trades in this game. Obviously, we had small stakes again, so I think maximum liability at any point was, I think £10 was the most I was liable for, and that was a back bet, I think. But I didn't do any audio for this, so I am sort of audio recording after. So I'm going to see if I can sort of give best ideas for what I did and where I did. I've got my notes saved, so I can explain my thinking of some of them. And yeah, we can sort of divulge of what we did in this game. So looking here, as we are obviously starting out here, we have joined the action after 2 wickets in 2 overs. So my initial strategy was, let's wait for something to happen, see if South Africa get off to a good start or India get off to a slow one, or India take wickets. And what happened is India took 2 wickets. Looking at the stats that I had and things, so with the ground, basically South Africa started well. I'd expect them to go up to about 1.7, and obviously if India started getting wickets it would drop down to very low because their starting price was 1.46. So as you can see sort of here, I did look to get in at 1.18, but in actual fact they hit 6 straight after a wicket, obviously 1.6, so the price jumped up straight away a few ticks, which I missed. It's not the end of the world. But I would have liked to have got in there. That was a slight missed opportunity, and then the value sort of disappears a little bit because actually the market corrects itself where it should be. So we've got this crucial part in the game as well. So we didn't enter the position originally. So my initial thoughts were I wanted to get in just after that second wicket in the second over. We didn't manage to get in at that point, obviously, and then, as you can see here, there is now another wicket, so it is now 23. So you can see I'm looking to see if I can get a lay bet into the market here, to try and take some value, which I thought at 1.12 it was. I just couldn't quite decide where I wanted to get in, so I thought it was 1.1. I wanted to ask for a price rather than take one. It's always better to ask for a price. Got the entry slightly messed up here, but I'll keep an eye and I will see how I entered. So we didn't have the best of entries here, so we ended up, the first trade that I placed was here, ended the power play 1.2. I thought, so my thoughts were that this price could start to drift from 1.2, especially as now the field spreads. It's a good time to get in if someone's had a struggle power play and you've got 2 batters looking to rebuild. So my thesis was with David Miller and DeWalt Brevis, they were going to start rotating the strike, take boundaries when they were there, and start to put on some runs. So my ideal here was evaluate again at 10 overs. So I was going to give this trade 4 overs, see where we were, and then make a decision of what I was going to do following those 4 overs. So I get in at 1.2. I'm happy with the 1.2. Not the best entry. We could have got in earlier at 1.12 or 1.13, but we got in at 1.2. And now we're just sort of waiting. So we pick up here an over later, 7th over, 52 for 3. So an over's gone. The price has sort of only moved 1 tick, and then we jump to sort of 8 overs in, and a 6 has just been hit by Miller there. And the price is sort of still a bit stagnant. I think there was a good over before, only 4 runs you can see there. So the price dropped, and then with that 6 it sort of started to come back up slowly. I think there was a bit of a delay here. I think I may have paused the recording whilst I was recording this live, but my theory was here that they were going to be slow, and all of a sudden you might get sort of boundaries hit, which in turn would make the price jump up. So my theory was right, and as you can see, sort of the price is creeping up there to 1.23 now, and it just takes sort of 1 or 2 big overs, and I start thinking, right, okay, is this crunch time? Am I going to start to look feeding things out, and what's the best part for me to get out here? And as you can see, sort of 6, 1, 4, and this over started to be quite a good over. So we started to think, right, what are we going to do? Let's do 1.25. Let's take out some of the money at 1.25, and I think, funnily enough, actually there's more boundaries in this. So I think Varun took some, So he took a bit of treatment in this over, so I could have held on and had even bigger profit on this one. So this is sort of like a trailing stop, but not on the exchange. This is not on the BetAngel app. Sorry. So this is on Betfair on the website. So this is what you would do on a ladder interface, but on the one-click betting sort of screen. So we're looking. Obviously, we're at 1.3, looking to slowly get out. As I'm happy with the £2 liability that I've made 50p. With that, again, small stakes, it's relative to bank size. So the theory was there that I got this trade correct. I was happy, and then I need to start thinking, okay, how far is it going to go? I mean, long term, I think, and obviously South Africa won the game. So if we'd have stayed in at 1.2, we would have made the whole £20 stake, obviously laying, but again, that's a risk that you don't trade, because as a trader you do that if you're a bettor, but we are trading. So that was the first trade. Obviously got in, got out, got that all sort of happy, tidied up, and that was the first trade done with a 50p profit. So a bit of an odd one really. I obviously started to cash out, and then we got to 12.2 and a wicket, so it went sort of I got out, waited an over 6 and a wicket, and you can see sort of the price here came down to 1.39. So I thought I was going to lay India again here, and I did for I think £5 there. You can see, so I laid India again for £5. Obviously, liability is only £1, I think 40 at this point. If I can see that. So yeah, my theory is I thought, yes, there's a wicket, but I still think actually South Africa are in a good position here. They're 117 for 4 after 12.2. I thought again it looked like a good batting wicket, and from what I was watching, I thought that there was going to be some more runs. It's not going to be a low score here, and the target that South Africa were hitting, if they were hitting more than 175, I thought it was very difficult to chase 175 on that wicket. So my theory here was I was going to lay India again here, and as you can see straight away, it went 1 wicket, 1 run, and I believe there was a boundary straight after. So we start to again drip feed orders out of the market, sort of reducing the liability and slowly hedging the positions. Or 2 no balls even. I believe Miller hit the next ball for 6. So it goes up again. We've just added on to our, I think it was 47p, we just added 20p, 15p. So we're starting to slowly drip feed out, and there we go, straight up to 1.5, 72p here. Again, from a maximum liability at this point at £2, we've made 77p profit relative to bank size. So slowly sort of feeding out pounds here, a pound there, seeing actually is it going to be another quite sort of profitable over for the South African batsman. And you can see, so wicket, 2 no balls, 6. So sort of watching here and thinking, oh, shall I take that? Shall I take the 70p? What am I thinking? Shall I keep it going? But generally, my sort of rule of thumb is if I'm trading in the middle overs like this, and I'm sort of backing a batting team, a wicket goes and I lay the other team, so I lay the team that's just taken the wicket, so I'm effectively laying the bowling side. I'll only maybe wait an over at maximum of this, because if you get another wicket, it's normally you're looking at quite a big loss. So with this you go wicket, no ball, boundary, get out, and as you can see there, we green up and we've got 70p profit from 2 trades. Maximum liability has been £2 and we're 70p in the green. So the next bit of the trade here, again, there's a wicket, and the price comes in to sort of 1.38, 1.39 again, and I thought I'm going to keep the momentum here. I thought South Africa were going to finish well, so I laid again. £5 stake, 1.39, maximum liability, because of the profit we've already made, was £1.25. So we got in here. I think to start with, actually, it didn't go our way. I think it started to come, so I think there was a couple of dots and the price sort of jumped down, and then I think sort of it started to stabilise. So as you can see, so we've gone in at 139. It's now down to sort of 1.37. So I'll show you in a moment just what it happened. But this was the entry point, 1.39, laying India again at £5, just to think South Africa were going to finish strongly. So as per normal, I set myself certain stop losses. So with this trade here, I was comfortable if it hit 50p. If I lost 20p in this trade, I was going to cut it. I was going to do it. And you can see there, it drops to low. It drops to 47. I sort of had a little look. So Jasprit's bowling. And actual, my statistics were, if Jasprit Bumrah's bowling, don't bowl against him. Don't bet against him, because he's arguably one of the best bowlers in the world, best finisher in the world. I thought, I'm just going to hold. I'm going to wait. I'm going to wait for another bowler, because I don't think they're going to get much out of him. So this is over 16 at this point. And as you can see, 4 singles. So it was a good call, because the price will drop back down, and then when there's a new bowler, a different bowler that isn't Bumrah, the price will back up. So this is a very common market bias to Jasprit Bumrah. So you see the overs finished, it was a 1 run, and you see the price jump back up from 1.34 to 1.36. So that is, in my eyes, it was a good trade here, thinking actually let's get out and hold for a minute, because if a wicket goes, it's going to crash out and it'll wipe everything out. So we were going to hold. I was going to wait for the next bowler, and I did. I held, I waited, but I actually didn't get in at this point. So I was a bit watching, as you can see just then, the price jumped out, wicket goes. So I was very lucky in that respect. I think I was watching the TV. I wasn't paying too much attention actually to what I was doing. I wasn't in a position where I thought I had to put in a trade into the market. So I sort of waited, and then I got to the point again here where I thought, well, actually it's going to be a new batsman on strike. So I don't want to basically I don't want to put in a bet against Corwin Bosch. Basically, I effectively wanted Tristan Stubbs to be on strike, so I waited to the end of the over again, and then I think that a single came, and then I think Jasprit Bumrah bowled the next over again, so I still didn't get in because I did not want to bet against Bumrah, and I think that paid off quite well, because I think there was a wicket and the price ended up, I think, going to 1.2 at the end of this, so the price drops down. I was thinking of getting in at 1.3, and I thought, oh, that's the price I'd like. 1.3, let's see. And Stubbs obviously hit a single, so he's not on strike. Oh, well, there you go. There's a 4. There's a boundary. I think there was another wicket, so he got out, and it held at 1.3. So there, we jump to it here. Jasprit Bumrah's bowled a very good over. There was dots, if I scroll up. So Bumrah bowled. I'm looking at now, what is the value here? What can I lay? What am I happy to bet here? What am I happy to lose? What's my stop loss? So these are all going through my head. And I'm thinking, this last over, I think South Africa are going to go all guns blazing. Tristan Stubbs is still in. And again, he's one of the best finishers in the game in T20 cricket. So he's still in. I thought, I'm going to lay here, 1.2, very good price for £5. So effectively a £1.10 liability, which will then go to 50p because of the 50p green that we've already made from our 3 trades so far in the T20. So I'll let the last over play out. We're gonna have a little watch. So I'm sort of just watching to see if it's getting matched, where the money's flying around. So we're looking at 1.22 for a small stake. So as usual, again, once I've entered the trade, once the price has been taken, I'm then always looking at where am I going to get out? How far is it going to run? So I set up an early sort of 3 or 4 tick sort of trailing stop here. So at 1.25 I place £1. That's just to clear a little bit of the red off of the end, just in case. So if it slightly comes up, if there's a boundary and then another wicket, it doesn't make the loss so bad. So I put my first order in. We're going to watch sort of ball by ball here. So we're sort of keeping an eye. We can see it slowly coming up. So we got in at 1.22, and we're looking to get £1 out at 1.25 here. So I think, yeah, it was back-to-back twos. So it was a 2 and then another 2, which sort of held the price at where it was here. So it didn't jump up, it didn't sort of drop down, it sort of just held nicely around 1.2, 1.23. So as you can see, so it went 224 dot. So it sort of jumped up and the dot ball brought it back down again. So it went up to 2.5, 2.4, and then sort of dropped down to 2.2 again once the dot ball. But all of a sudden, jumps up 1.26. I believe there was a 6. So it jumped up again. So the theory was it, and what I do like about the last over in innings, if you've got a bit of green, you can sort of play around a little bit. You can think, what's the most likely outcome that's going to happen? Is the batsman going to swing if they got somebody set who can hit boundaries, or have they got sort of a lower to middle order batsmen that aren't going to swing or aren't good sort of ball strikers? So my thinking here was, there's going to be volatility. A 6 is going to make it fly out, and a wicket isn't really going to make the price drop too far. So again, once you earn sort of the right to be able to do it, and as you can see here, look, I'm looking now to get out actually sort of towards the end of the innings. We've got an 89p here currently profit. Again, maximum liability at any one point at this point is still £2. So we're up to 89p, so back-to-back 6s to finish the innings. And there we go. I think actually, because of the market bias of India, I'm going to cash out at this price. I don't think that it's going to keep drifting, although South Africa did have the momentum. I still thought that the India price was going to drop, was going to come in, because that is the market bias of the most fans in the world are Indian cricket fans, so that the price is going to either hold or come in shorter towards India. So I thought cashing out for this first innings profit of 86p. And I also I can add to this. So on my notes, I also said, or I sort of did something wrong. I because of the bias, I could have, and hindsight is a wonderful thing, I could have let this run. So I could have kept that position open there with 32p liability on India, because actually eventually what happened was South Africa took wickets early and the price shot up very quickly, and we could have turned the 86p into a lot more, or the 87p into a lot more, due to the fact that there were early wickets. But that again, that is the research that I did. So I pressed cash out, looked actually then again at the scores and thought, hold on, I could have stayed in. I thought, yeah, I've made a slight mistake. But again, like I said, hindsight's a wonderful thing. You can't change it. If you do make mistakes in trading, you just go, okay, I made a mistake. We're going to learn from it. And as you can see here, fourth ball in, wicket, the price is now at 1.6, and that 87p could have been a lot more. So we're this was a bit of a difficult one to call, really. I thought, again, I'm not going to jump in at one wicket. I thought, actually, I'm going to wait for 2. So have a look at the graphs here, and as you can see, some lovely swings here, down and up, sort of getting in at the bottom there, getting out again up near 1.5. So there was opportunity in this game for the prices to trade this game against two sort of good teams, instead of having a short price favourite, which we've covered before. So I did do one more trade. So there we go. We get into 1.1, and there's 2 wickets, and Surya Kumar Yadav comes in, who I know is a good player, and it's 1.1 overs as a wicket, and there are 2 wickets. And again, at this point, my strategy of, if there's 2 wickets in a power play, generally people will try and solidify, and the price will not always go too much further if you do the research. So it's not for every single time, but generally, if you have the right team, and as you can see there, if I'd have got in at 1.79, first thing that happens, there's a boundary, and the price is now at 1.6. So that could be a scalp trade of you're trading for one delivery in this game, and I could have got in, price drops, cash out, profit. So that's just, I think the price comes all the way back down to 1.5 here, but you can see I looked to put in a £5 bet at 1.79, and now the price is 10 clicks or 15 clicks lower. So that is also another thing of trading the bounce, trading the, oh my god, there's wickets early. 2 wickets doesn't kill a chase. It may harm it slightly, yes, but a lot of the time the odds will correct too far, and actually there is value in going against the grain. Like I sort of like to say in trading, I was looking to get in at 1.53 to lay in here. I thought they had a good little run, so it went boundary. I think they scored a lot of runs quite quickly there, so the boundaries did come, and I thought, right, I want to lay them, but the price that I want to lay them at is 1.53. I thought that was my value play. Transpired it didn't actually happen, because I think they did quite quickly lose a lot of wickets. But again, in this, you don't chase prices. If you chase the prices, you will lose. You will not be profitable. So you have to have your defined points, and you have to have the mentality of, if it doesn't go well, move on to the next one. Move on to your next trade. Wait for the next bit of value. Wait for the market to show you what it's going to do. Wait for the game to show you what it's going to do. Because if you're trying to predict every move, again, you won't be profitable. You have to wait. And as you can see there, all of a sudden, wicket 29 for 3, 5.4 overs, and I go against the grain again here. The run rate is 11.5 on a deteriorating wicket, and I think South Africa have the momentum. I'm going to chance my arm at backing South Africa. I think that they are going to struggle. So there was a wicket, there was not a lot of runs that went on after that, and we're sort of coming towards the end of the power play, and they're 30 for 3, a very tall task here, and I didn't think that, I think Maharaj was just about to come on and bowl, so I thought that this was now going to be a very difficult task for India to do. Again, sometimes you can switch and flip your strategies on the fly. It's how confident you are of doing it. And in this one, I thought I was doing well. I was reading the game fairly well. My so far, I got some decisions right, or more right than wrong. And yeah, I thought that actually I'm going to back South Africa to take more wickets. So after our analysis, we looked at 1.38, I think. So we waited to the end of the power play. I was waiting to see pictures of Maharaj holding the ball. So I backed with a £10 stake. So this was the biggest stake of my trade. I was very confident in this one. Obviously, if India did come back, then I was prepared to lose that money. Obviously, I think I would be looking to cut it out here if it went to sort of minus, say it flipped round to it was minus 75p. I think it actually only got to minus 20p, and I was close to calling it there and going, you know what, no, I'm gonna cash out. I'm gonna take the loss. I'm gonna take the hit. But like I said, my predisposed point, I think from my notes, was minus 50 to minus 75p here, and if it did flip round, that was it. And I think 1.5 was my maximum as well. If South Africa started to drift, I would be out. So those are my predisposed points. And I just thought, yeah, South Africa are going to put the pressure on. And then not long after, obviously, as you can see there, sort of at the end of that over from Maharaj, there was a 6, which the price went out to minus 20p, and I was close to pulling it, but I held. I thought, no, I'm going to wait for a moment. If it does go to 50p, I'm out. And all of a sudden, there's a wicket. So that strategy that I thought, actually, South Africa going to dominate, it's come in 10, well, what did I get in at 1.37? It's come in 5-6 ticks, and it's given us a better profit. We're above £1. Again, like I said, the liabilities were slightly high, so we're looking to take this price now. I'm comfortable with my day's trading on that game. I've cashed out, and there is £1.21 profit, which I was very happy with. I think that was a good day against two evenly matched teams. And the key to these kind of games, when you have two evenly priced teams, is wait for the value. The run rate, obviously, like I'm sort of showing on the screen here, goes up to 11.44. It's a very tall order on a slow sort of Asian wicket to score that quickly. And as you can see on the graph here from the in play, they were low, really low, and then 4 wickets go, and their price comes up to above 4s. So it is important in these markets that you wait for the value to show you. Don't chase prices. Don't try and gamble on what's going to happen. Never guess. Always take the value that is on offer. Always wait for your predisposed points. Always have your ideas of where you want to exit, or where are you comfortable losing, or what would you be comfortable losing to gain. So always have your plans, always have your strategies, don't ever guess, and remember, you cannot trade every single swing. You just can't. It's just not feasible. You take the value where you see it, and if you don't get it right, you go, hey ho, it happens. We'll go on to the next one, because there's so many games across every single week, every month, every year. You just got to let it go. So I hope this was quite useful. Obviously, it's two more well-matched teams than a sort of very short-priced favourite and an underdog, which obviously we've covered in another video. So I hope you like this one. Thank you for watching, and hopefully this showed you some insight of the thinking between a team, two sort of very good teams that I thought the market was slightly overpricing the favourite.